So welcome to part 2, the 15th of August 2024. Official name now for this this community, which is called World Eagle Buffet. And the World Eagle Buffet is a platform, a community where you can treat it as it is a buffet. We will share opportunities on and offline in order to help people fulfill their dreams and aspirations, and to be self-containing, regulating. So welcome to part 2. Part 1, we have had a general discussion. Have a look on this YouTube channel or on Stefano's or Dominic's or Boniface or anyone here, their YouTube channel, see if the videos are there. And we promised Boniface in this part of the meeting to share his knowledge about trading. So I'm going to ask, and the good thing, that's what I was going to say, the good thing about Zoom meetings is recording. No matter whether we have 1,000 people or 2 people, doesn't matter, we record and we publish. You know, there's a very clever way of duplicating and helping people. So Boniface, please open your mic, do screen sharing, and please show us something that you're doing in order, how you are creating freedom in your way. You know, can you enlighten us with that?
Yeah, I will do that. I do that.
I'll tell you when we see your screen. Okay.
Okay.
So, ladies and gentlemen, a good friend Boniface is going to show us what he's doing in order to create lifestyle freedom. He's about to share his screen with us. Anytime now. Drum roll, please. Now the band kicks in. We need a band. We need a local band that kicks in. All right, we see screen. I'll leave it up to you, Ace Boy. Go and get him, okay?
Hope everyone can see my screen, right?
We can see your screen. Go for it.
Okay. Yeah, whatever I have shared what we call a stock market. This is stock market.
Sure.
But in the real sense, is a mimicked market. Okay. We want to go step by step. I've shared the stock market, but this one is a mimicked market, which means it mimic the real market. It copy the real movement of a stock market. Okay. Whatever you see now here, we call it indices. We call it indices. I'm trading what we call indices, but is being mimicked by the derived. Okay. So whatever is driving this market is a computer. So whenever I decide to trade this market, I trade this market because if it's being mimicked by a computer, it means it's being driven by what we call a logarithm, right? So whenever this market is being driven by a logarithm, then for me to be accurate, or have a high chances of me making numbers of winning, or increasing chances of winning, I have to trade through a logarithm movement. Okay. So in this market, I can trade manually. Whenever the market sell, I can go for a sell manually. Whenever the market is going on a buy, I can go for a buy manually. And also, I can trade through a robot. Okay. The robot, if I decide to trade robot, the robot that I'm going to use, it will detect the algorithm, the numbers that are moving this market. Okay.
Can I ask you a little question between, Boniface? Do you mind?
Okay, Robert, continue.
So the word indices is really another word for assets, right? Like they're the assets, it's the value behind assets, and assets are value like anything, right? It can be anything, correct?
Right, correct.
Okay, and then when you talk about mimicking, What is exactly what you mean? Is this like forecasting it?
Exactly.
So futures? Futures?
Exactly, futures.
Okay.
It,
So
it means,
it's real assets futures, correct?
yes.
Thank you, sir.
Okay. Can I continue?
Please be our guest.
Okay, thank you. So the market itself, I said I can also trade manually. By trading manually, I have to have a knowledge or a proper information about trading manually. I have to know what drive market, right? So if I want to trade manually, I have to see the interest of the market. If the market is being driven by what we call the drone of liquidity, that is what those area we call the liquidity area, where people put their stop losses. Where people put their stop losses, it's an area whereby there is a lot of wealth because they are the people are willing to sell something. They are selling something so that if the market go on their way, they can make money. If the market go against, they are willing to lose a certain percentage that they are willing to lose. Okay? So that's a manually. If you're trading manually, you have to know all those fundamentals. Like if I want to trade the technicals, like if the market is being driven by liquidity, you have to identify those areas. What are the liquidities? In the market, there are those areas what we call order blocks. Order blocks, they are the areas where people place their orders. You have to spot or to identify those areas on how market can be attracted on these areas because there are those private institutions. There is a bank where they place their orders, right? So we focused on where there is a lot of liquidity. That's a manually. So you have to know what is the order block. There is what we call a fair value gap. There is also where we call a drawn out liquidity. That's a manually. But if I want to trade using my robot, I just only need to detect a market when the market has a momentum. When the market is on a momentum. Momentum, it means the market has now gathered enough fuel to get the liquidity area. Then it take the liquidity. Then I have to track the market movement. That's where I'm calling the market when the market it has on a high momentum movement. That's the moment my robot will make a proper profit for me, a good profit for me. So there are two options. I can trade manually and also I can trade robotically, automated with a robot. My robot, I'll be the one to command my robot what I want the robot to correct for me whenever the asset lose the value or whenever the asset gain the value, right? So without wasting time, I want to first of all go direct to my robot. I'm trading these indices, and the indices itself it's on a volatility, on high volatility. Let me call it a 25 volatility is a low volatility. This market is a low volatile. Indices itself, the asset itself, because it goes from 10 volatile to 250 volatility. Then it means 250, we say that market is the high on it's so high. The volatility is so high. Whenever I click on a 10 volatility, it means that market is on a low volatility movement. Okay?
Is that what you call high frequency trading, the 250?
Exactly. Exactly. So I have already analyzed my market and I was already in this market. I have managed to make some good money in this volatility 25 through using my robot because the robot will trade for me through what we call algorithm. Everyone, I'm sure everyone know what is algorithm here. They are the numbers, right? So I will go to my robot where we there you can see there is a bot builder. I will just click bot builder right there. And this is the robot. Those are my settings. Those are the setting of my robot. I just command the robot to correct to correct for me algorithm whenever the market is on a move, right? So I just in algorithm, you just need to understand what are the algorithm? Algorithm, they are the numbers, right? And the numbers start from 0 to 9. Yeah, the number 10 and the number 11, they are the formation from 0 to 9, right? So I'll just praise my prediction here because the robot will only detect whenever the market is on a move. So, and if my robot is trading under a algorithm, I have to select the number that will favor my side. Whenever I select a lower number, it means the risk will be lower. Whenever I select higher number, meaning the risk will also increase. And also the chances of making a good profit will also be higher. Okay.
Can you spell the word I don't get that word
algorithm.
Can you spell that?
You want me to spell the word algorithm?
Yeah.
The word algorithm.
Algorithm. Algorithm.
Yes,
Got it.
Yes. R-A.
I got it.
G-O.
Algorithm. Okay.
You get it?
Yes, sir. Thank you. Sorry about that.
Thank you. So my robot will detect whenever the market is on a move. So I'm trading indices, as you can see here. The market is underderived, and it's trading what we call continuous indices. And I have already commanded my robot to trade indices with a low volatility, the volatility 25. Okay. And there is there is a into bracket volatility 1x. It means that volatility is trading on a high speed. Okay. And there is a volatility 25 index. So I have analyzed my market and I have chosen to trade these indices at a low volatility of 25 1x index. Then the trade type under my robot, I have command this robot to correct the digits, whereby I said the algorithm start from 0 to 9. There is no, we can't say the algorithm is 10, 11, the 12. Those are the formation from 0 to 9, right? They are the formation of numbers from 0 to 9. So the robot, I have already commanded my robot to correct for me the digit whenever the market is on a move from the algorithm, from my prediction that I will show you in few seconds, in a short while. Okay. So as you can see,
is it fair to say that the higher validity, the higher the risk?
Okay, no. I can't say that because the higher also the volatility, the higher the risks, also the higher the winning. The higher
sure. But in general, the higher the risk, the higher the profits, but also the higher the loss.
Exactly.
Okay.
Exactly.
Thank you.
It's kind of with a low volatility market, it will not make you be in emotions. You'll be able to go smoothly, but sure.
It's called conservative, right? Steady.
Exactly. So I have commanded my robot to correct for me the algorithm numbers. That's why I have choose the digits. Then, as you can see my robot here, it has what we call over or under. What are the over or under? The over, it's when the market is buying, right? And under is when the market is selling, right? So over, it means whenever the market buy, start from a lower number, whereby a lower number is from 0 to 9. So if I predict over, meaning the market must be on a buy, right? And whenever you enter into a market, whenever the market is a buy, then you're supposed to know whenever you go to a market and the market is on a buying, you're supposed to go there as a seller. You're not supposed to go there as a buyer, right? Because we said you buy low, you sell high. So whenever the market is buying, I need to go there as a seller. Whenever the market is selling, I need to go there as a buyer. So that I do what we say, I buy low, I sell high, right? So I
Which is
command
called
my robot.
arbitrage, correct?
Exactly. Okay. So whenever the market is over, well, I command my robot to go over and I have to go to the market, the volatility 25-1S. I have to analyze my market to see to get a clear direction where my market is heading. I have to analyze my market and get a clear movement what my market is about to do. My market in the next few seconds or few minutes will go on a sale. So I come here to my bot. The market, if the market is going on a sale, then I need to become who? A buyer, right? Then I came here, contract type. I have to command my robot. If the market in the few minutes, it will go for sale, then I need to come here and go for buy. Over. We talk about over. It's when the market is coming from a lower number to a bigger number. A logarithm is starting from 0 to 9, right?
Yeah.
So I have already commanded my robot to go for over because I'm sure the market will go on a sell. If the market go on a sell, then I need to go in the market as a buyer. That's why I have already put.
Can I ask you a little question here, sir?
Yes, sir. Continue.
So, this is a robot you installed on your own trading platform, correct?
Yep.
And this is a bot that everybody can regulate, like everyone can use this.
Everyone can use this.
But my question, Boniface, is that in how far will AI influence these kind of bots? Because AI can predict better than humans. So is there any AI involved yet or not yet? This is still manually, right?
It's still manually.
Yeah, yeah. Do you see that pretty soon AI is setting the parameters for your bot? Is that something?
Exactly.
Yeah. Okay.
Yep.
Cool.
Okay. Can I continue?
Yeah, because my main question is like, okay, you're absolutely a genius with this bot, but I'm almost sure that the regular people, they somehow need help with automation, correct?
Yep.
So we are actually building robots ourselves in combination with AI because AI is predicting like crazy. It's like such a huge influence. So my question to you is, do you notice that influence, and would you also consider looking into AI to perhaps make a combination between this robot type of trading and also AI, or do you say it's still humans and we need to sit between 3, 6, or 9 screens in order to predict the market?
When I use my robot, is a bit different for someone who is trading through AI because I'm already in crypto market.
Yeah.
I'm also in I have an AI in a crypto market. I'm also trading coins in a crypto market, whereby it's giving me 100% accuracy, no losses.
Yeah. Wow.
But it's only make only few percentage profit in a per trade.
Yeah.
But when I compare this one, the one that the robot that I'm commanding manually, it's make a good money, a huge profit in a few seconds, whereby I'm about to show you on how it will do on my account.
And would it be easy to teach people, or can you do it for other people, or do people need to learn this themselves?
No, it's very simple. Once you understand what is a logarithm, it will be so easy for you to understand. It's something that you can join in a one session or two session, and you'll be able to do it by yourself. Wherever you
as
have.
in that you're able to teach people how to set this robot. That's what you're saying, right?
Exactly.
Wow. That's fantastic. Thank you so much. I'll shut up. Take all your time to explain this, because this, I think, is a masterclass how to how to approach trading in combination with manual and robots. I mean, the next phase is obviously AI, but that's a different subject, right? So please take all your time, mate. And those who are listening, this is one of the opportunities that we are offering, and I'm sure that Boniface will give us more master classes and is able to teach us more. Okay, so thank you so much for doing this, Boniface.
Thank you. Let me continue.
Please do.
So my robot, I have already commanded when the market is on a selling, I need to go in the market as a buyer. I have already commanded my robot. I want to go there as a buyer when the market is selling, because I want to go buy low. So I have there is another option here where it says default candle interval. Default candle is intervals. Is I want to analyze the market from a bigger time frame, then I go to execute to a small time frame. Those are the rules for a trader. You analyze the market from a bigger time frame. You see how strong the market is going. Then the domination in the market from a bigger time frame. Then you come to execute to a small time frame. Why? In a small time frame, you will be able to see when the market is being rejected. The rejection, that kind of how it's struggling to the right, to go to the direction. So I want to execute it to a small time frame, a 1 minute time frame. Then the robot itself, it's an automated. Also, it can also restart itself whenever it detects any error. So you can tick this box.
This is crazy.
Yes, whenever the robot detects any error, it can restart itself and continue trading for you. So the next page is what this area, we call it risk management. In this area, we do what we call risk management in this area, whereby you stake. As you can see, there is what we call stake. You stake amount, any amount you want to build, any amount you want to get deducted from your main account. From my main account, I want to be, from my main account, I want $25 to be deducted per every move. Every move, every move. What do I mean? $25 from my main account. What do I mean by this? If my robot is trading what we call algorithm, then it means, as you can see my candle, it's moving. Everyone try to move to zoom your screen. As you can see, my candlestick is moving on a buy. That movement, we call it tick. That movement, we call it tick, or in a proper language of a Forex language, we call it pip. We call it pip, P-I-P, pip. So per every pip, it carry a price value. It carry a price value. As you can see, this asset, it's worth 51, 54, 98, blah, blah. It's keep increasing whenever the asset is gaining. Okay, so per every movement, we call it tick or pip, it has its value. Whenever I put my robot $25, it means per every move, it will give me a $25, or whenever the market trade against my trade, it will deduct $25. Are we good so far, so good?
So far, so good. And just to make sure that people are not missing anything, we will continue these videos with more lessons, and we have approximately 8 minutes left, so that you please be time conscious as well. And I promise you that we'll get back with more specific explanations. So maybe you want to keep it the next 5 minutes to round off this session, Boniface, just for your information, huh?
Thank you. I'll do it in. I'll try to hurry up. So I have already commanded my robot to deduct from my main account $25. There is what we call martingale. Martingale, it means whenever the market trade against my trade, whenever the market trade against my trade, whenever I go for loss, the market will do what we call a recovery. Even if I go for loss, once I collect my prediction, I'll be on a profit. That's what we call martingale. Take profit, it means every trader must have a target, a clear target, a certain amount you want to hit in a day. For example, I want to make only 50 bucks. I want to make only 50 bucks, $50. I will just put here 50 bucks right away. Sorry, 50 bucks. And I want, when the market, or when my robot detect only 50 bucks, automatic, it will stop. Okay. The stop loss, I'm willing to lose a certain amount in a trade. Whenever the robot hit maybe 50 bucks, automatically the robot will just stop itself. It will not deduct any amount from there. But because I want to make a quick, because of the size of my account, I want to put this one in a big, because of what we call martingale. The size of my account, it's allow me to put a high stake of a stop loss, because I'm 100% in a logarithm of 0 to 9. I will just stake predict 2. I'll just predict digit 2, whereby the ticks we said it's what we call the market movement, or the pips in the market movement. So the prediction in a logarithm, hope you have write it down from 0 to 9. I'll just predict the market to correct any number from 2 up to 9. So if I want to go for a loss, I'll go for loss because of the market. If the market correct digit 2, digit 1, and digit 0, that's the moment I will go for loss. But if the market collect from digit 2 and 9, I'll be on a profit side. So automatically, I just go direct to my market and go and trade when the market is on a sell. Because I have already commanded my robot, please trade for me whenever the market is selling, because I want to go there as a buyer, right? According to my analysis, I can see my market is on a strong area to go on a buy. Okay, if the market is buying, then I need to come here and go for sell. Then I need to come here and predict under, because the market is on a buy, under it means I'll go there as a seller.
I'm fascinated in this part of your analysis, because the decision to buy or sell is always the one that will be the most important. Do you agree?
Exactly.
Okay, we promise everyone that we will do our utmost best to have longer time on Zooms, also for you, Boniface. But my main question before we leave you the rest of the time, this robot, did you create it, or are you purchasing that or renting that? Can you say a little bit more about that aspect?
I'm coding this robot myself. I'm coding it.
I mean, did you build it yourself?
I built it myself.
Oh, wow. Well, ladies and gentlemen, we're witnessing a giant here. That's fantastic. That's fantastic.
So,
Are you willing to share your knowledge with some of our technical teams to make it useful for the masses as well?
That's why I'm here.
Oh,
I'm
wow.
willing to share.
Huge.
So I want you to give me just 1 minute. I want to execute according to my analysis. Because the market is on a buying area, I can come here and go and run the robot to correct the algorithm on my side. So the robot itself, it's trading for me. Whenever the market go against my trade, can you and everyone see?
Yes, very clear.
You can see?
Yes.
Okay. As you can see, there is a total loss and there is a total profit, right?
Yeah.
You can see what the robot is doing for me.
So
the green is a profit, the red is a loss.
Got you. And can you say that due to the robot and the stop losses that it's risk-free, loss-free?
Exactly.
Yeah.
As you can see, even if the robot go several losses, it automatically make a huge profit for you itself.
And Boniface, in the decision to go long or short, is there any friction left in your mind?
Nope.
Whoa. But I mean, if you install the algorithms of the bot, you need to be sure that it's short or long, isn't it?
Once you come here, you see the market is on a short, you go for long. You trade for long.
Oh, and how many pips are you waiting until you decide?
How many pips?
Yeah, let's say the market goes short. Do you wait 3 or 4 pips to confirm your decision?
Yeah, if I want to maybe 3 or 2 pips, I just go to my robot and command it.
Oh wow! That's the area where you need to be sure of your decision, right? Just to wait a few pips when it goes down, then you do the robot, then you act, then you let it run a minute, correct?
No, the robot itself, it will automatically stop once it has already hit
got it.
$50.
Got
It's
it.
doing the list. It's doing the list. It's an automated.
Got it. How long did it take? How long did it take you to create a bot like this, mate? 20 years, 30 years? Are you that clever to do it in 2 years? Or how long did it take you to come to this point?
Just 6 months, I was able to.
You're brilliant. You're brilliant. Now listen, I don't mean to be rude, but we have like a minute left, and sometimes Zoom cuts us off. Okay, so let's promise to give you more time the next time. Can you live with that?
Sure, sure.
Are you sure? Now you have like 30 seconds left, or maybe a minute left. So we'll leave the rest of the time up to you, and then give me 20 seconds. You see the clock, right?
Okay.
Give me 20 seconds to close the videos, please.
So, okay, according to my market, the market movement, I can see the market clear direction. It has already changed the direction, and I can come here and finish the execution. Automatically, it will automatically hit the profit, as you can see now, down here from take profit, you see, automatically. Fantastic. It will detect the $50, and once it go on a loss, automatically it will do what we call martingale recovery.
Yeah.
To go back to profit. There is no way it can take your money. Automatically, it has already, the app derive.com say take profit of 59 USDT.
Got you, mate. I don't mean to be rude. We will definitely put red carpet out for you for the next Zoom. This has been one of the most fantastic Zoom meetings I've had. So thank you so much. For now, Boniface, I hope I don't cut you off.
Thank you.
And if people